Good afternoon, everyone, and welcome to our webinar today on navigating PPP forgiveness. My name is Kathleen Sly, and I work out of the Minnesota District Office of the Small Business Administration. And today I want to warmly welcome Kristina Bergstad. Kristina Bergstad is trained as an accountant, but she's also a small business owner. She helps her family run a multifamily housing business, and she has learned what it takes to run a business and what owners deal with on a day-to-day basis. She also understands that most business owners did not go to school for accounting and might not enjoy the numbers as much as she does. Kristina founded Number Solutions to work with other small businesses and explain the accounting and financials to them so that businesses can make informed decisions and maximize profitability. More recently, Kristina has been working with companies to explain the programs and options that are available to small businesses during the COVID-19 pandemic in terms that non-accountants can understand. So welcome, Kristina, and we look forward to the presentation this afternoon. Thank you.
So there's a lot that's been going on with the PPP, and we're not going to be able to cover every single thing in a 1-hour webinar. But what I want to do is just kind of start off by giving an overview and a little bit of background information about the Paycheck Protection Program. And then I'll give a little bit of detail about the Flexibility Act that was passed and signed into law on June 5th. There's our slide. Okay, so once we kind of go through those first two of an overview of the PPP and review of the Flexibility Act, we are going to go into a little bit more detail about certain aspects of the loan forgiveness. Again, we can't cover every single calculation in detail of the loan forgiveness calculation, but we wanted to provide at least some practical guidance on some of the aspects and focused on some of the topics that a lot of business owners have had questions on or are kind of wondering how to do it. So we'll go through a few of those things, including figuring out your covered period and alternative payroll covered period, which pay periods and payroll costs to include in your forgiveness calculation, and then FTE consideration. So FTE stands for full-time equivalent. So some of the factors that go into figuring out your FTE. Then I'll wrap up with some recommended next steps and a long list of resources that are available to small businesses. So if we go to the next slide, the Paycheck Protection Program, or PPP, was established when the CARES Act was signed on March 27th, 2020, when it was signed into law. And the Act temporarily added this new loan product. It had not previously been offered before. And the intent is to provide economic relief to small businesses who have been adversely affected by COVID-19. And the real purpose of it is to keep workers employed and to keep the workers paid. So if we go to the next slide, this just kind of gives an overview of the loan basics and terms. So it is an SBA loan. It is an SBA loan product that was new. It hasn't been offered before, and it's a temporary loan option, but it is administered through lenders. So banks, credit unions, what are called fintechs. So it's your PayPal, Cabbage, Lendio, Square. Those have been some bigger fintech companies that have been offering the PPP. Those are the lenders that are doing the administering the actual loans with businesses. It is available for small businesses. On the next slide, we'll go through who are those eligible small businesses. The loan amount is determined by taking your average monthly payroll and multiplying that by 2.5 times to get your loan amount, but the max amount of the loan is 10 million. And your average monthly payroll, how you calculate that is gonna be different based on the type of entity that you have. So whether you're an S Corp, a C Corp, partnership, sole proprietor, etc., the calculation will be a little bit different. The interest rate on these loans is 1%, and there is no collateral or personal guarantee required. The term of the loan, it is 5 years for those loans issued after the Paycheck Protection Program Flexibility Act was signed into law on June 5th. However, if you were issued a loan prior to that date, your loan term is 2 years. There is guidance available right now that says if you were issued a loan prior to that Flexibility Act passing and you would like to extend your loan term, you might be able to work with your lender to change your loan term. But as of now, it's that 2 years when you sign those documents with your lender, it had a 2-year loan term. Now, one of the more attractive aspects of this loan product has been the idea of loan forgiveness. So this is where the borrower can apply for loan forgiveness and you might not need to pay back all or part of the loan. So you might be able to get partial or full loan forgiveness on the amount that you received. If you do have a portion that is not forgiven, then that turns into a loan that is payable within either the 2 or 5-year loan term. So if we go to the next slide, there is a list, and this just comes directly from the SBA's website of who is eligible. I'm not going to go through and read this off to everyone, but these are entities that are eligible and can apply for the PPP and who have been affected by COVID-19. I do want to point out, though, that included on here are sole proprietors, independent contractors, and self-employed persons. So if you are one of those types of individuals, you are able to apply and you are eligible. So some of you might have heard that the extension to apply for the loan is now August 8th. It was previously June 30th. So if you have not yet applied for the PPP and you fall into one of these categories and you're eligible, and that the PPP would actually make sense for you and your business, depending on your facts and circumstances, there is still time to apply for the PPP if you haven't done so already. There is, I do want to mention, a resource on the SBA's website to help match businesses with lenders if you've had trouble finding a lender, whether it's a bank, credit union, etc. To get a PPP loan. There is a tool that you can use as a resource to find a lender. All right, so if we go on to the next slide, as you all probably know, Katie, if we can go to the, oh yes, okay, here's the PPP timeline. So a lot has happened since the CARES Act was established back at the end of March. I'm not going to go through every single update and change that has happened and speculation of what can happen in the future, but I just wanted to highlight some of the bigger updates and changes that have happened and kind of how the whole process has unfolded. So as we know, the CARES Act established this new loan product, the PPP, at the end of March. And the initial funding that was given to this program ran out pretty quickly. And additional funding was added to the available funds for the PPP at the towards the end of April. And I looked yesterday, and what the Treasury site has on there is that there is still plenty of money left. It's about $132 billion left in funds allocated that are available to businesses. So again, if you haven't applied and you meet the criteria and it makes sense for you and your business, there are still funds available. So we had the Act established, and then since then we've received additional guidance and clarification from the Treasury Department and the SBA through what are called interim final rules, or IFRs, and they've been answering frequently asked questions. And there's a whole list of them up on the Treasury's website, treasury.gov, and there's a red stripe at the top of their website, and you click on that and it is for the PPP and lists all of them out there. So we've been getting clarification and our questions answered through guidance that has been released throughout this, the past few months. And in mid-May, there was an initial loan forgiveness application that was released on the Treasury's website. And this really helped provide clarification of how the loan forgiveness calculations are actually going to work. So that was very helpful. However, it was based on the initial terms of the CARES Act when it was signed in March. And on June 5th, the Paycheck Protection Program Flexibility Act was signed that had some big updates, and so I'll go through those in a little bit. And so because of that, since there were some changes to the covered period time frame, how the minimum amount needed to spend on payroll, etc., a revised loan application was released in mid-June. That's still considered the current forgiveness application to use. It's available on the Treasury's website. And it also includes an option with a Form EZ. So if you meet certain criteria, you can fill out the EZ form, and it's essentially a simplified version of the loan application. And like I mentioned before, the extension to apply for the PPP is now August 8th. So previously it had been that you needed to apply by June 30th. There are still funds available, and that has been extended to August 8th as of today. So if we go to the next slide, we'll cover some of the big changes that came out of the Flexibility Act. Again, this doesn't encompass everything, but these are just some of the bigger items that resulted. So the first one is that the Flexibility Act extended the covered period for loan forgiveness from 8 weeks to 24 weeks. So now businesses have 24 weeks to spend their loan proceeds to be and have them eligible for forgiveness. They also changed the minimum amount that you need to spend on eligible payroll costs to 60%. Previously, it had been 75%. And now businesses also have until the end of the year or December 31st to restore that full-time equivalent or FTE number. Previously, it had been the end of June. They also added in some exemptions to reductions in FTE, which we're going to go through all the exemptions that are available today later in the presentation, so I'll hold off on that. And the last point on here is that the loan term is extended to 5 years. So if you were issued a loan after the Flexibility Act was signed into law, then your loan term is 5 years. Again, if you were issued it before, you can work with your lender, and if both parties agree to extend the loan term, you might be able to do that. So if we go to the next slide, I put together a comparison chart just because I know this can be a little bit confusing for those people that received a PPP before that Flexibility Act and then after, and trying to navigate which rules apply and all the different changes and how they would affect you. So what I did was I just kind of put some of the basics up on this chart. I have 2 different columns. The first one, as you can see there, is PPP loans issued before June 5th, the date of the Flexibility Act. And then the second column is PPP loans issued June 5th and after. So I'm going to go through and just do a little bit comparison so you can see what the differences are between the two. So the loan amount did not change whether you received it before or after that Flexibility Act. It's still going to be 2.5 times your average monthly payroll, up to $10 million. The loan term is what we've talked about, so 5 years going forward, and then loans that had already been issued are at that 2-year loan term. Interest rate stayed the same, still 1%. The covered period, both of these, buckets for those issued before and after June 5th have the 24-week covered period. However, if you received a PPP before the Flexibility Act, so before June 5th, you have the option that if you want to opt in and elect to use an 8-week covered period, you are able to do that. So that is only available to those who received a PPP before June 5th. And then lastly, the minimum amount to spend on eligible payroll costs is a minimum of 60%. And that's the case for both those that received the PPP before and after that Flexibility Act. All right, so if we go to the next slide, you know, you've received this PPP, you've probably been using the proceeds already. I know some people received it months ago and they might have already used up all of their PPP funds. And, you know, the next part of the process is to obtain loan forgiveness if you want to obtain forgiveness and that you met certain criteria. So to have forgiveness on the loan, you need to spend the funds during the covered period and you must use them for certain expenses. I kind of consider these expenses to fall into two different buckets. The first one is eligible payroll costs. So you need to spend a minimum of 60% of your loan proceeds on those eligible payroll costs. And then the remaining amount, or 40% or less, needs to go towards other eligible expenses. And that includes interest on business mortgages, business rent and business lease payments, and business utilities. So those are the ways that you can spend the funds, and you need to do it during the covered period. There are a few different factors that could potentially reduce the loan forgiveness amount. Two of the bigger ones are if you have a reduction in salary or wages for employees and a reduction in that full-time equivalent amount. And we're going to focus on the second one during today's presentation because that's a little bit more complicated and we're getting more questions around that topic. And the last thing I want to point out on here is that, you know, all this information, by the way, is as of today. We know that, you know, things keep changing, but as of today, you need to apply for loan forgiveness from your lender. It's not an automatic process. So you will need to work with your lender and apply for loan forgiveness, you know, fulfill your lender's requirements and get the loan forgiveness and actually apply. It's not just something that is going to automatically happen. And that's how it is structured as of today. Okay, so next slide, I want to go through and talk about that covered period. It's pretty simple, but just want to go through and make sure that everyone kind of understands how to figure out what your covered period is, because you need to spend your loan proceeds during this time frame. So your covered period is going to start on the day that you receive the loan proceeds from your lender. So that's day one. And then it's going to be either a 24-week, which is 160 days, or 8-week, which is 56 days from that day you receive your loan proceeds from the lender. Again, you can only use that 8-week option if you were issued a PPP before June 5th. You have the ability to opt in and elect that 8-week period. Otherwise, you're going to use that 24-week period. And in no event can the covered period extend beyond 12/31/2020. So that's how the covered period, the guidance has it as of today. One question that I've been getting a lot, which I'll just point out now, is, you know, people are asking, okay, well, you know, I did receive the PPP before the Flexibility Act happened, that June 5th date. Which should I use? Should I do the 24-week period or should I opt in and elect the 8-week period? Unfortunately, there is no clear-cut answer. It's going to be different for every single business. It's going to depend on your own set of facts and circumstances. And, you know, you're going to have to determine what makes the most sense for your business. What I've been doing for some clients is just running scenarios to see and just actually calculating things out under using both time frames, whether the 8-week or the 24 weeks, to see what makes the most sense. So yeah, again, unfortunately, I can't give you a one-size-fits-all answer. It will depend on your unique business situation. All right, so we're going to go through an actual calculation and example. So Katie, yep, great, next slide. So again, your covered period is day one is going to be the day that you receive the funds. And then you're simply going to add either 167 days if you're using a 24-week period, or add 55 days if you're using an 8-week period. Now, you might recall from our last slide that a 24-week period is 168 days and an 8-week period is 56 days. You add 1 day less because the day you receive your loans is actually counted as day one. So you would just add either 167 or 55 to day one to get your end date for your covered period. Just a little hint, Excel is great. It actually can do this for you. You don't need to necessarily take a calendar and count the days. You can definitely do that, your preference. There isn't a rule on that, but you can put it into Excel and do a formula to figure out what your end date is. So Kate, if we can go to the next slide, we'll actually go through an example. So in this example, we received our loan proceeds on April 20th. So that is day one. If we add 167 days to that, we will have our end date of October 4th. And so therefore our 24-week covered period is from April 20th to October 4th. And you would need to use your funds that you received for your PPP during that period to have them be eligible for forgiveness. Again, you need to use them on eligible expenses, which include payroll and then that other bucket. Now, if we go to the next slide, another term that I want to go over is this alternative payroll covered period. So this came up when the initial loan forgiveness application was released in mid-May. This was to kind of help business owners, as they knew that the payroll periods aren't going to necessarily align with when you receive your funds and when you're going to have that covered period. So it was in an effort to reduce some of the administrative burden of figuring out these calculations. So it's available to businesses that run payroll bi-weekly or more frequently. You can then use this option. And it's only for the eligible payroll costs. So if you use this option for payroll costs, you can then elect to start your covered period for those eligible costs on the first day of the first pay period following the PPP loan disbursement. And don't worry, we'll go through an example because that's a little bit of a mouthful. But just wanted to remind people that and reiterate that this is only for the eligible payroll costs. For all other costs, you still use that covered period, which we just went through. So let's go to the next slide and actually go through an example, which will hopefully kind of use an example, have it be a little bit more clear and make a little bit more sense. So again, we're going to use that PPP received funds on April 20th. And so again, our first day is of our covered period is April 20th. But we want, in this example, we run biweekly payroll. And the first day of our first pay period following that date we received the PPP loan is April 26th. So I'm able to use the date of April 26th to start my alternative payroll covered period. So at the bottom there, you can see my cover period for, all those other expenses is going to be from April 20th when I received it. And in this example, we're doing the 24-week period, so it's plus 167 days. But I'm able to then, for my payroll costs, use an alternative payroll covered period of April 26th to October 10th. So it's the April 26th plus 167 days to get to that October 10th date. Okay, so if we go to the next slide, once we've kind of figured out our covered periods, now we need to know which pay periods to include in the calculation. And the guidance says that we can use payroll costs that are paid and incurred during the covered period or alternative payroll period, whichever one you elect. So again, that alternative payroll is an option if you run biweekly or more frequent payroll, and it's just an option. You don't need to, it's just available to you. So whichever one you use, you can include your payroll costs that are paid and incurred. So payroll costs are considered paid on the day that paychecks are distributed or an ACH credit transaction is originated. And they're considered incurred on the day that the employee's pay is earned. One last thing to consider here is that the guidance states that payroll costs that are incurred but not yet paid during a borrower's last pay period of your covered period or alternative payroll period are eligible for forgiveness if paid on or before the next regular payroll date. Okay, that's a lot of information. So, and this kind of gets to for people that might know the terms cash and accrual. It's a little bit technical. So what I wanted to do was actually provide an example, and hopefully this will make it a little bit more clear to people. So if we go to the next slide, we're going to walk through an example of how I figured out which pay period to use in the forgiveness calculation for one of my clients. So this is an actual example that I have. So one of my clients received their PPP loan disbursement on April 20th. I'm going to use an 8-week covered period just for simplicity for this. It made sense for them. Then we have a lot less pay periods to talk about. So we're going to keep it simple with the 8 weeks. So the covered period is April 20th to June 14th. So April 20th plus 55 days to get to June 14th. But then their first payroll period after that April 20th date is April 25th. So their alternative payroll covered period is April 25th to June 19th. So if I go to the next slide, I included at the top of this, we got a little animation with those slides, I guess. Okay, so some key dates at the top. So we just went over the disbursement date and my covered period and alternative payroll period. Then what I did, and this is just how I approached it, you can use whatever method makes most sense to you, is that I actually took a pen and paper and wrote this out, put those dates at the top of my paper, and then wrote out the pay period dates that were on or near that covered period. So I started out with when the pay period began, when it ended, and the date paid. So the first pay period that I looked at was the pay period that began on April 11th and ended 2 weeks later. And this client is on a bi-weekly payroll, if you couldn't tell. And that payroll was paid out on May 1st. So as you can see, the pay period started before they even received their PPP, but the date paid did fall during the alternative payroll covered period that I'm going to use. So since May 1st fell within that time frame of April 25th to June 19th, I am able to include that in my loan forgiveness calculation. Then if I go to the next pay period of April 25th to May 8th, that was paid out on May 15th. That falls nicely into the alternative payroll cover period, so I include that, and that's the true for the next couple pay periods too. And then I get to the last pay period that I have on there, which is June 6th through June 19th. That was paid on June 26th. So this pay period was within the alternative payroll covered period, but the date that it was paid was outside of that period. But one of the long sentences on the last slide said that if the pay period was during that covered period and it was incurred, but it wasn't paid until after, you can still include it. It's just as long as you paid it on or before the next regular payroll. So you essentially are, paying out on time. You're not delaying any payment. Then you can include that as well. So for all of these pay periods that are listed on here, I am able to include those payroll costs, the eligible portion of those pay periods that I've run, in my forgiveness calculation. So the cash either went out the door or the pay was earned during my alternative payroll period, so I can include it in my loan forgiveness calculation. So hopefully that kind of clarifies things. I know, this is just one example, but I think it really helps to write things out, put your key dates in there, and see when your pay period began, ended, and when it was paid, to see whether you can include it in the loan forgiveness calculation or not. Okay, so those are what we just went through was the covered period, alternative payroll covered period, and then what pay periods to use in your forgiveness calculation. Next, we're going to jump to the next slide, which is FTE considerations. So this is a big topic that I know a lot of people have questions on, so that's why we're going to spend a little bit of time on it today. FTE stands for full-time equivalent. So this might be a new term to a lot of people out there, and just to go over kind of big picture what it means. So you and your business, you might have full-time employees, you might have part-time employees, a mix, one or the other, but FTE, or full-time equivalents, is how many full-time employees it would take to do the same workload if you only had full-time employees. So if you have a mix of full-time and part-time, if you have just part-time, kind of converting what your current workforce is to if you only had full-time employees, what would that full-time equivalent amount be? And it is a little bit of an interesting concept because it's not necessarily, it doesn't have to be a round number. So you could have 10 and a half. You don't need to have a round number for your FTE, even though you really want to have 10 and a half people. But so with the PPP loan program, the intent was to keep people employed and paid. So that's why we have to look at this FTE number. And your loan forgiveness could potentially be reduced, so the amount that you would be forgiven on the loan, if you have declines in your FTE amount. So you're going to have to look at what your FTE is during your covered period, which we just went over, to a reference period and compare them. The reference period, I kind of think of it as historical period or kind of pre-COVID, and that's just my own way that I look at it. So you're going to have to compare and make sure that you are maintaining that FTE amount, and if you do have any reductions, your loan forgiveness will be proportionally reduced. So let's, next slide, take a look at what those reference periods are that you need to compare, use as a comparison. So this has been pretty consistent since day one of what these reference periods are. And you can, as a borrower, you can elect one of the following. So you can either pick the reference period of February 15th to June 30th, 2019. The second option is January 1st through February 29th of this year. And then if you're a seasonal business, you can select either option 1 or 2, or you also have the ability to choose any consecutive 12-week period between May 1st and September 15th, 2019. And So you can choose, whichever one of these reference periods to use for comparison purposes. You are able to calculate what it would be under different periods. You can do it from, February 15th to June 30th, or the first 2 months of this year, and you are able to see which one gives you the lower amount, and you can use that as then your reference period amount. There isn't any guidance as of today that says you have to use the higher amount or the lower amount. You can choose which one to use, and it is in your best interest, generally speaking, to use the lower amount for comparison purposes. Okay, so let's go to the next slide and talk about how to actually calculate that FTE amount. So this is spelled out in the guidance and in the applications, and for each employee, you're going to take the average hours paid per week and divide by 40 and then round to the nearest tenth. So 40-hour work week is considered to be full-time for purposes of the FTE calculation for PPP. And you can round it to the nearest tenth. The maximum for each employee is 1. So if you have someone that's working consistently 60 hours a week, you don't need to go over 1 and count them as greater than that. They're capped at that 1, no matter how many hours they work. And then there is an option for businesses to use a simplified method. So instead of having to calculate for each individual employee the average hours, divide by 40, round to the nearest tenth, and do it for every single person, you can elect to use the simplified method. And with that method, you would say that for each employee who works 40 hours or more, you're going to assign them an FTE of 1. And then each employee that works less than 40 hours a week, you assign them 0.5. So it's just a simplified method. Instead of having to do calculations on an individual by individual employee basis, you can use a simplified method. However, just one thing to note here, that is if you do use either method, that first one where it's kind of like the actual versus simplified, you need to use that method throughout your application. So if you use it, if the simplified method, if you use that to figure out your reference period FTE, you also need to use the simplified method when you're figuring out your FTE for your covered period. So you can't pick and choose, you need to use a consistent method throughout. Okay, so if we go to the next slide, we're gonna run through an example. I named my employee Bob here. So we're gonna just assume an 8-week covered period, and we're gonna calculate the FTE for Bob during the covered period here of 8 weeks, just for simplicity, so that I didn't have to put in 24 weeks of hours, and just make it easier to read. So here are his hours for those 8 weeks. And so if I add up the hours and divide by 8, because there's 8 weeks to get a weekly average, I get an amount of 35.13 as his average hours per week. Then if I divide that by 40, so 35.13 divided by 40, I arrive at 0.87825. Rounding to the nearest tenth, his FTE would be 0.9. So if we go to the next slide, and we'll keep going with this. So Bob's FTE for the covered period is 0.9. If we had used a simplified method instead and not, looked at his average hours by week divided by 40, etc., his FTE would be 0.5. So this is how just the mechanics and the mathematics behind how to calculate FTE for an individual employee. And just a reminder, you just need to, whether you use that, actual method of, where you would arrive at 0.9 for Bob, or if you use the simplified method of, using either 1 or 0.5 for each employee, you just need to use that same method throughout the forgiveness application calculation. Okay, so if we go to the next slide, I just wanted to illustrate then, for that last example, we kind of went through an individual employee, but if you look at, what the total is then for all your employees, because you're probably gonna, who knows, you might have more than one employee. In this example, we have 5. So I went ahead and I figured out their weekly averages, and the average FTE column then shows what their FTE would be if I divided by 40 and rounded to the nearest 10th. So if I figure that out for each employee, I'm going to add up all of those numbers to get to a total of 4.1. Now, as you can see here, just want to point out employee 1, they worked an average of 42 hours per week, but again, there's a cap on the maximum per employee of 1. So even though they might have worked more than 40 hours a week, they're still going to be capped at 1. So I'd add those all up to get a total FTE of 4.1. If I had used the simplified method instead, I would have assigned employee 1 and 4 an FTE of 1 because they work 40 hours or more, and everyone else were below that threshold, so they would have 0.5. So if I were to use this, my simplified FTE total is 3.5. So this just kind of shows you the different methods, and you can go through and for your various periods where you need to figure out FTE, you can look at what both methods would give you for a total FTE. You just, again, have to use that same method throughout. Okay, if we go to the next slide, I'm going to go over the exemptions to any FTE reductions. So on the next slide is 2 of them, and then there are 5 total as of today. So as I stated a little while ago, you will potentially have a reduction in loan forgiveness if you have a reduction in your FTE amount when comparing your reference period to the FTE during your covered period. So your loan forgiveness amount will be proportionally reduced for any reduction in FTE. But as we know, in the real world, there are things that come up. And so now there are exemptions that are available to businesses that if one of the following circumstances occurs, you will not then essentially in a way be penalized. You will not have your loan forgiveness reduced if one of these circumstances happen. So this first one is if you've made a good faith offer to rehire an individual who was an employee with you as of February 15th, and you were unable to hire a similarly qualified employee for that unfilled position before the end of the year. The second exemption that's available is if you make a good faith written offer to restore an employee's reduction in hours and at the same salary or wage rate during the covered period or the alternative covered period, and the employee rejects the offer. So those are the first 2. If we go to the next slide, we'll go over the other exemptions that are available. And the next slide will show that if you have the circumstances where during your, there we are, covered period, if any of the following happens where an employee is fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in their hours, you'll also receive an exemption for that, and your loan forgiveness amount will not be reduced if one of these following circumstances occurs. What I can say here is if you have one of these scenarios happen for you in your business, is to just read the guidance to make sure you understand what the requirements are and what you need to do. But in general, you just need to make sure that you document everything and you have everything in writing, and you can prove out that you are able to get this exemption, and that there is documentation available to provide proof for that. So the exemptions on this slide and the previous one were kind of based on what's going on with individual employees. there is now what is available, what's called safe harbor. So if we go to the next slide, we're going to talk about the 2 safe harbors that are available as of today. And the safe harbors are more, how I see it, is like a general safe harbor for your business. So if you have one of these 2 occur, you will not have a reduction in your loan forgiveness amount for a reduction in FTE employee levels. So this is a business as a whole, whereas the exemptions were more focused on the scenarios for individual employees. So the first safe harbor that is available is if you are not able to essentially be at the same level of business as you were before COVID or as of February 15th. Because of requirements that have been established or guidance issued during the year by a regulatory agency such as the HHS, CDC, or OSHA. And it's because, they've released that guidance to maintain standards for sanitation, social distancing, or any other worker or customer safety requirements related to COVID. So if you weren't able to have the same level of business activity because of those regulatory requirements, then it's understandable, is the way that I interpret it, that you wouldn't be able to have the same number of FTEs as you did in compared to your reference period, because you're not at the same level of business activity as you were before COVID hit. So you will not be penalized for that. And the second safe harbor that is available is essentially that you won't, again, your business, if you're able to restore your FTE employees level to what they were during the period of February 15th to April 26th, if you can restore that FTE level no later than December 31st, compared to the pay period that included February 15th, you will not have a reduction in loan forgiveness due to reduction in FTE levels. So those are the 2 safe harbors that are available today. We don't know how this will go. There might be more available in the future. I have no idea. But these are really to address what's actually happening, and understanding that not all businesses are going to be able to get their FTE levels up to what they were prior to COVID. And so just from my personal opinion, I urge people to look at these 2 safe harbors, because if you're able to meet either one of those 2, then you won't have any reduction in loan forgiveness due to FTE reductions in your reference period to your covered period. So they're great safe harbor options to have out there, and a way to help you maximize your loan forgiveness. So if you're able to do either of those, again, just document, look at the guidance to see what is required, and just make sure that you are able to have the documentation and proof that you met one of these 2 safe harbors, or you can meet both of them too. So that when you apply for loan forgiveness, you have that proof that you can turn in if needed with your loan forgiveness application. Okay, so that is a lot of the technical stuff. If we go to the next slide, we're just gonna go through some recommended next steps. These are just my general recommendations. It's gonna be different for everyone, but we just went through a lot of information. Of course, we couldn't cover every single aspect of the PPP and loan forgiveness. We just kind of focus on certain aspects of it. But I just like to have people leave with some steps to take next. So, as we started this, that if you haven't applied for the PPP and you are eligible, like we said at the beginning, there is still time to apply. You have until August 8th as the deadline to apply, and there still are funds available. So if it makes sense for you and your business, consider that, and you can go to a lender to get the PPP. You know, we've talked about, you know, all the different changes and how the program has evolved over time. So I just recommend staying up to date on the latest news and guidance. In the next few slides, we'll have some resources that are available. They're great ways to kind of stay updated on what's going on. And though some things that you can do now is also just calculate and determine some of the basics that we discussed. So figuring out your covered period, you know, looking at that date, doing the math, figuring out what it was. Look at what your FTE was during your reference period. That, you know, as a historical period, you can select either the February 15th to June 30th, or the first 2 months this year, and then the seasonal employers have an additional option, just figuring out what your FTE is during those periods. And then just determining the minimum amount you need to spend on eligible payroll costs. So it's at 60% of your loan amount needs to be spent on eligible payroll costs. And then I just, you know, in general, just maintain documentation and stay organized. It's a lot easier to start putting things together now than waiting until the end when you need to apply for forgiveness and scrambling and trying to backtrack and figure out what you need to put together. So yes, it's a lot of information. On the next slide, we have a list of resources, and there's another slide too with some helpful links that are out there. And Katie can send that out too. So and you have this in your in the PDF version that Katie sent out. The SBA and Treasury, there's SCORE and Women's Venture, small business centers. I have been going to the AICPA website for a lot. It is, you know, American Institute of CPAs, but they have a lot of great information out there that is available to non-CPAs as well. And here's listed my website, numbersolutions.com, as well as my contact email. I am staying up to date on all of this PPP fun, as well as some of the other stimulus programs that are out there and helping businesses. So I'm a resource as well. And then I think we have a slide for links too, some of them that I referenced during the presentation. And that might be helpful for you to reference. I know, Katie, I went a little bit long, but are there any questions that I can quickly address in the last few minutes that we have?
I have a question.
Yes.
If you're a business owner and employed, and you have to transfer over money, you know, it's called flow through money, and you pay your taxes at the end of the year as the owner pulling your draws. Do you qualify under the safe harbor, or do you have to document with the, you know, like when you have your monthly meetings for your S corps? Do you have to state in there how much you're going to take in your draw? Because you're paying yourself.
Yep, the safe harbor more has to do with the FTE levels. So that's your full-time equivalent. So the number of FTEs, not necessarily any dollar amount that you have. So I just want to make that distinguishment. Yep.
Okay.
Mm-hmm. Katie, I think you're still on mute.
Oh, sure. And I think we are going to try to take questions. We'll take one more question from the chat, and then you do have Kristina's contact information, and then I will also provide our office information for the SBA district office, and that will also, so feel free to send along your questions to us directly. We can get back to you. There is a good question on around the FTE calculations. How should businesses decide which calculation to go with?
Well, as far as using the simplified method versus kind of what I refer to as the actual, you know, there isn't anything out there that says you can't run scenarios for everything and figure out what essentially would give you the most loan forgiveness. So if you're trying to figure out which one to use, there isn't a hard and fast answer of use this one or that one. What I've been doing is just running the numbers under both methods to see what the totals I get and what would be best in the specific situation to use.
Okay. Well, thank you so much, everybody. Here again is our resource slide. So if you're looking for one-on-one consultation, our small business development centers are available, as well as our SCORE mentorship program. If you are a women-owned business, our women's business centers, including Women Venture, who covers the Twin Cities area, and Women's Business Alliance for Greater Minnesota is also available. And then if you are a veteran-owned business, the Veterans Business Outreach Centers is a great place to go as well. Here on the last slide, as we are getting to 10 o'clock, is the contact information for the Minnesota District Office. So for those of you who have follow-up questions, I know that Kristina answered many of our questions, and I really appreciated the scenarios to walk us through, because we can read the answer and then really understanding the answer is one thing. So that's appreciated. But if you all have further questions, we do have a pretty quick turnaround in our office for email. If you give us a call, it takes a little bit longer to get back for voicemails, but if you email us, we can get you an answer quite quickly. So thanks again, everyone, and I really appreciate Kristina Bergstad and your expertise in coming and sharing that with our small business owners today. So thanks again, everyone, and we hope you have a great rest of your day.
Thank you.
Thank you.